Let's now welcome in Chris Conway. He's joining us from the Australian Stock Report, and he's joining us live from our Melbourne studios. Chris, welcome to the program. Let's get back to the market, to the here and now. We've got the local market currently just hanging on to positive territory, up by about 0.1% or 7 points. We talk repeatedly about the underperformance of our market in comparison to global markets, and even those in the Asian region. I mean, are we likely to see that continuing as we head toward the latter part of this January month?
Good afternoon, Nadine. Look, I would certainly hope not, but look, obviously to this point we have indeed underperformed. We're certainly underperforming the US, and even look regionally at a market like the Hang Seng, which is, surged about 6%. So yeah, our market is significantly underperforming. A bit of context though, particularly in relation to what we're seeing in the US. Obviously there's an ongoing narrative there, and there has been for some time, really since Trump was elected, about first of all infrastructure, which we haven't seen yet, but the ongoing narrative surrounding tax reform and the benefits that that will bring. And of course we had Apple talking to it overnight, and even BHP today talking specifically about the benefits that tax reform in the US will mean to their bottom line. We don't have a similar sort of narrative here in Australia. Certainly we had the Santa Claus rally, which we get every year. It's a seasonal thing, but we're in a bit of a lull period now in terms of the story. And look, I know we always like to pivot back to fundamentals and valuations and all those things that we go into determining whether a market should go higher or lower. But we mustn't forget that there's people out there, and people need to sometimes see a story or believe in a story in order to hit the buy button. We just don't have that here in Australia at the moment. I think that will be rectified though through our upcoming confession, and then leading into reporting season as well.
Yeah, well, now that we're on the subject, we've had some upgrades coming through from companies. Certex is one, Lavisa in the retail space, Vita Group. Most of the expectations are actually more favourable as far as some of the, the changes that we've got, so-called confession season. What is that, Martin, telling you as we head closer to February?
Yeah, I mean, the good news tends to travel fast, right? So, the companies that have come back from the new year and looked at their numbers and considered their continuous disclosure obligations, the ones that have got good news have certainly come out with that. And you're right, it's just sets a more positive tone. There are obviously patches of the economy, parts of the economy that are going through a rough phase. I think anything to do with the consumer is still kind of tough. But I think, as you point out, some companies have come back, looked at the numbers and said actually they're a bit better than expected. So, we're seeing every day one or two companies come out with positive news. So it does augur well for a good February. Yeah,
Bellamy's as well. You can add that to the list. Just like to pick up, Chris, on BHP Billiton, of course, out with its production report today. We have shares up by 0.8%. Copper was a real standout there.
It certainly was. Production up 17%, and I think the run rate from Escondida at 315,000 tonnes in the December quarter means that BHP is well on track to meet its annualised target. Another modest highlight was iron ore, of course, coming in at 72 million tonnes. I think estimates pegged at around 71.3 to 71.5, so a slight beat there. But then obviously on the downside was the performance from coking coal. Had some problems in that division, so they've downgraded their estimates slightly, about 3 million tonnes, which was about 7%, I think, downgrade from what they'd previously expected. So a bit of good, a bit of bad. Overall, probably much of a muchness, and that's why we're not seeing a great move in the share price today.
What do you make of the share price moves in BHP Billiton? Because of course we had that huge run up, bit of a pullback the past couple of days, but the question is, does this production report, make its valuation any more attractive, or does it justify the lofty valuations that we're seeing?
Nadine, I think that every day there's a commodity price move in one of the commodities that BHP produces, and I really think there's a lot of institutional fundies drifting back to work after their holiday, and they're really looking in the crystal ball and saying, well, where's iron ore going, where's coal going, where's copper going? In the last little while there's been more chatter about copper and it becoming a much tighter market going forward. So if analysts are going to basically rerun the numbers and upgrade their forecast for copper, that will flow through to sentiment about the BHP share price. All in all, I think the outlook for commodities is basically pretty robust. But the counterbalancing factor is if you like, the weakness in the US dollar and the strength of the A dollar, which takes a bit of the shine off rising US dollar prices. So there's a number of moving parts, but overall I'm pretty comfortable with the outlook for resources generally.
Now, we also heard from Whitehaven Coal today. Martin Crabb, I believe that Shaw and Partners has a sell on the stock. Can you give us your reasoning behind that? Because I believe overall you still like the company. I mean, it's the comeback kid. We know that. Is it a question of momentum and where that further momentum comes from?
Yeah, look, we've had a sell on this for a couple of dollars now. So, I mean, our whole vernacular around stocks, and particularly in the mining space, is look, in periods where there's downward momentum to commodity prices, they tend to trade at a 50% discount to what we think their long-term perceived value is, their net present value. So it's around about $2, $2.40 for Whitehaven. So it's trading at 36 cents. It's now at sort of $4, right? So it's run well through that sort of premium. So we've sort of moved negative. We think met coal, metallurgical coal, is not going to stay above $200 a tonne. It's going to come under a bit of pressure. And so we wouldn't be chasing Whitehaven up here. So, I mean, the quarterly was obviously a bit mixed. The stock's a little bit weaker today, but it does, as Glenn says, it just hinges on where you think met coal prices are going to be in the second half of the year. And we think it's a little bit squeezy at the moment. We'd expect them to come off. So we look at BHP, Rio, Fortescue. Those stocks are trading around NPV. We think they'll move to a premium, but nothing like where Whitehaven is. Whitehaven's at double NPV. So we just think that's got a lot of ground to come back.
Okay, Chris, anything to add on Whitehaven Coal today? I mean, is this one that you watch?
It's certainly one that I watch, but not one that we're in at the moment. But look, I would just very briefly tend to agree with Martin in terms of the met coal price coming under a bit of pressure. But also the CEO of Whitehaven was on earlier talking about some increased cost pressures at one of the mines that is responsible for the production downgrade which they issued today. So they're cutting the mine a little bit deeper, more roofing support needs to be put in. It's going to add some costs to any production out of that mine. So at a time when prices are coming off a little bit, costs are going up a little bit, yeah, it's sort of like Martin, I wouldn't be chasing it up here. I'd like to see it come off a lot more before I was going to have a crack at that one.
And, that's something that, we haven't really focused on a lot when it comes to these production reports, but increasing costs. We saw that from South 32 yesterday as well. I mean, is that something that when these production reports come across your desk, Martin, you zero in on right away? Because, of course, so fundamental. It doesn't matter what price is doing, it's the cost controls that really has brought the miners to the favourable position that they're in right now.
Yeah, so, I mean, the Australian mining companies, you have to take your hat off, have done a fantastic job of pulling costs out. Particularly in iron ore. I think we're sort of starting to recognise that these quarterlies come out. We're beyond that point now. There are not any more costs to come out. And you've got things like fuel prices and even wages, because we've gone from having too many workers in the remote areas to not enough again. So, that they're at the pointy end of having to pay more for labour. So you've got labour going up, energy prices going up. So we've reached the bottom. The flip side is commodity prices have been a lot stronger. So if we do enter a period of some weakness, then you'll see margins come right back, Nadine, to your point, yeah.
All right, Chris Conway joining us from the Australian Stock Report from our studios in Melbourne. I mentioned Bellamy's in passing. Oh, yeah, mentioned Bellamy's in passing there a little bit earlier on. A2 Milk, keeping a close eye on that one, pushing further into the US market. They've also upgraded the market. I mean, we have a lot of questions coming through from our viewers all the time on A2 Milk. Bellamy's, quite the turnaround story for Bellamy's.
Yeah, absolutely a turnaround story for Bellamy's, and that's because they ran into some production problems. The one we focus on, and indeed we hold, is A2 Milk. And as you say, came out yesterday with a bit of a market update talking about their further expansion into America, this time to the northeast region of the United States, opening up the brand to another 60 million potential consumers, and that area of the country equates to about 20% of the milk market. So look, anytime you're in one of these growth stocks like an A2 Milk, a Blackmores, or indeed a Bellamy's, what you're looking for is, of course, is for the company to find new ways to grow their product, grow their brand, and therefore, of course, grow their sales. So it's nice to see A2 Milk doing this. The caveat, of course, is, they're going in with milk, but that's not really the end game for A2. They want to prove that they can get sales in that area to support the brand. But then it's really about following in with the high margin product, which of course is the infant formula. But again, very nice to see that a company that has previously expanded exceptionally well is still looking for and laying down the foundation for further growth prospects.
Just briefly, we've had some breaking news on the screen for our viewers. We've got a bit of a change in the C-suite happening at Myer. We've got Nigel Chadwick being appointed CFO as Grant Davenport steps down. We also have Mark Crispy being promoted to Chief Operating Officer. Not saying, Chris Conway from the Australian Stock Report, that you might recognise any of those names. Perhaps you do. But does it speak more to, the ongoing pressures in that space, the ongoing external pressures happening when it comes to Myer?
This is a best guess, Nadine, of course, but yes, I would certainly suggest it talks to the ongoing pressures, the ongoing onslaught from someone like Solomon Lew as a great agitator, and also the fact that the business is a serial underperformer. So I remember it was maybe 6 months ago that their head of product and head of customer service, obviously two very important elements for any retailer, bit the bullet and was shown the door. And look, I don't know the nature of the changes here, whether people are going, but yeah, look, I would have thought that's a fairly disruptive and difficult environment to be doing your job in. As I said, with all of those factors in play.
Chris, thank you so much for joining us. Have a great afternoon.
Thanks, guys. Cheers.